if you don't mind, I'd like to take a few short minutes to just kind of go around the table and introduce yourselves to the crew that's coming on board here, if you don't mind, and then I'll give a quick round out of what the topics are and how we want the arc of this conversation to go. But then really it's open ended, and love for you guys to just have a conversation based on some questions that come through and so on as well. So with that. Jenny, do you mind starting with a quick intro and for the Buffalo community here?
Sure. Hi everyone, excited to be here. I'm Jenny Fielding. I am the managing director of Techstars New York City. Started my career as an operator, built 3 tech companies all in New York. And now, in addition to Techstars, I also do investing through a fund called The Fund. And I teach undergrads at Columbia. So that's a little bit about me.
Fantastic. Who wants to go next? John, do you want to go next?
Yep. John Zanoff. I've built a lot of fintech over the last 20 years for the largest bank and the largest asset manager in the world, and all along wanted to figure out what was happening outside of the walls of those financial institutions. And so I founded an organization called Empire Startups. It's the largest fintech platform in the world with 18,000 fintech innovators and entrepreneurs. And over the last 4 years, I've been investing in fintech at the pre-seed and seed stage. For the last several years, running the Barclays Accelerator, and now via a fund called Stella Ventures. You may be on mute there, Chi.
Sorry. Yossi, you want to go next?
Sure. Hey, Buffalo. Hello, everyone. I'm Yossi. If you can hear from the accent, I'm South African, a recent migrant to New York City. Came here 2 years ago to head up Techstars Blockchain Accelerator program. Prior to that, I was an operator and built an open source software company called Synac, which we scaled to a couple of million users and thankfully had an exit. I also run and co-founded a coding school in South Africa that teaches anyone with the ability and aptitude to learn how to code for free in a 2-year program. And I'm about to launch my own venture fund called Venture In that'll be investing in blockchain companies and other wild and crazy founders that are doing interesting things.
Fantastic. And then finally, David, if you give us a quick rundown.
Sure. Hey, everybody. David Cohen, one of the co-founders and a managing partner at Techstars, just to complete the Techstars circuit here. Techstars is now 14 years old, so it's been really interesting to watch the growth of it. But one of the things that I think is the coolest thing is what you're hearing, that people go on to do so much more. You're talking about 3 funds here. I think there's 30 now that have emerged from the Techstars community, whether that's alumni or employees and so on. So that's really cool to watch the spread of that. Techstars is here to help entrepreneurs succeed. Hopefully we're contributing a little bit to that in Buffalo. It's been awesome to be part of that work, and psyched to be with you here today.
Fantastic. Thank you very much, everyone. Really quickly, a couple of quick housekeeping things. For the Buffalo community and the attendees, we have a Q&A section in your Zoom app. If you want to start sending in questions as we go through some topics, that'd be great. As we have time and relevance, I'll go through those questions, either throughout the whole conversation or leave some time towards the end. There is a webinar chat if you're wanting to talk to each other as we're going through this. It's totally fine if you do that. And then finally, we're recording this. And so once we're done with this, we'll be posting it. I'll work with the Buffalo Startup crew to point you to the right place to be able to view this after the fact. You're all in for a treat. We have an all-star cast from Techstars completely. They're all in New York. And if I could have my druthers, I would want 5 hours with each of you. But here we have 1 hour for all 5 of you. All righty, so to that point, let's get started really quickly. This was supposed to be a finance track session, But then once I found out that we have, the all-star crew from Techstars, decided to open it up and broaden the topics a little bit more. We will get into some finance-related topics, especially around fintech and blockchain. I think that's an interesting space and a little bit of a wild west, I think, especially in blockchain. But Yossi, you can correct me on that one as we get into it. But in general, what I'd like to do is, right now, the key thing I think on a lot of folks' mind is the pandemic. How do you fundraise during the pandemic? How do you start a startup during a pandemic? And I'd love to get everyone's, thoughts on where, what you're seeing out there, some unique use cases of startups who do something special, particularly during this time, et cetera. Talk about fundraising. How are you doing fundraising remotely through Zoom? Is there deal flow? And how do you evaluate startups who are looking for funding in this time? And then in line with that, I do want to touch on, Yossi, you're coming in from South Africa, and Jenny, there's a lot of conversation around, female founders and so on. And I do want to talk about a diverse team building and what you're seeing from that perspective as well. And what kind of, takeaways and notes you have for the Buffalo community as they're growing out their team. And then lastly, a little bit more open-ended. What kinds of startups are you seeing? Are there particular unique types that you're seeing or particular makeup you're seeing in particular verticals or industries? Or is it pretty across the board? And then I want to dig a little deeper specifically into the fintech group and then also the blockchain group. And I think that you both could probably talk a little bit more across the board on both of those. And then finally end with Q&A and find key takeaways for the Buffalo community, if that makes sense. Okay.
Sounds awesome.
Fantastic. And I do not intend to do much of the speaking, so I'll kind of throw a ball over the fence, and hopefully you guys will engage and play. So to get started, obviously the pandemic and the shutdowns and so on has been pretty intense, particularly in New York City. So I kind of want to ask you all to kind of chime in. What are you seeing in terms of startups, and how are they adjusting at this time? Obviously, they're in different phases, but perhaps like the seed, pre-seed, maybe even Series A levels. What kind of things are you hearing from startup founders and how they're adapting at this time?
I'm happy to kick it off. So I'm actually just finishing up Techstars New York City, which has been running in the summer. So we were recruiting kind of during height of New York pandemic in March, April, May. Program kicked off this summer, and now we're wrapping up with demo day next week. And the good news, kind of the short answer to this, especially for all the founders out there, is funding is flowing at the early stage. So if you're raising pre-seed or seed, there's an incredible amount of activity. So we just had 2 weeks of investor weeks at Techstars New York, and we had 260 individual investor meetings with top investors and our 10 companies. So, we were, like everyone, a little bit nervous of, what it was going to look like, and people are really showing up. So we think that's great. Our mentors at Techstars New York, we have 210 mentors that all come in and, participate. I think we had maybe during our mentor matching weeks, we had maybe 2 or 3 people cancel or reschedule versus a normal year where that's probably, 25%. And so, founders, other founders, resources, people in the ecosystem, like everyone seems to be showing up to support the community. So I feel really positive about it. And my experience kind of running the program over the last few months is it's actually a great time to build a company.
Yeah, maybe give you a little global perspective from Techstars that might help frame the conversation. And I can't share screen, but on my blog, we've been releasing, Techstars data. So if you want to look at the second article on davidgcohen.com, you can see it. And I'll paste a link maybe here for everybody so that you sort of have it. But this data really let you see what we're seeing. So Techstars is funding 500 companies a year across the world. The portfolio is thousands of companies. And the question is, how has the pandemic affected M&A and fundraising? And so, in that article, we share some data, and you can see that, for things like M&A, it just went to zero in the April timeframe, and then very quickly bounced back to normal, as Jenny is talking about with fundraising. And you can see below with fundraising, there really was never even sort of a missed beat. The number of financings that we're seeing that we first hear of in any given month is typically between 40 and 60. And that has stayed in that zone, very, very consistently. So to Jenny's point, companies are raising money, investors are investing. Sure, valuations might be affected. It feels like a little bit, not a lot. And there are deals to be had across the system. In terms of what specific companies are doing, we talk to a lot of companies, and they broadly fall into a few categories. One is they have tailwinds. Something about the pandemic or the new world is helping them a lot. Companies that are maybe in the healthcare space or education space, right, have a lot of new tailwinds. That's obviously great. Some of them are massively affected where their business, just basically went to zero, whether they're in travel or, pet sitting or whatever the case may be, right? That causes those companies to just need to take a break and retrench and try to come out stronger. And so you try to help them with that. And then there's a set that just doing what they do. And it seems like, there's not much impact either way. Of course, the ones that needed to go out and raise money in 1 month, right at the beginning of the year, those companies are in a tough place because it's not that the money's not out there, but they were already in a tough place. So some of this can accelerate the problems that companies like that have. One of the hacks that we've been talking to a lot of our companies about is that the easiest place to raise money to give yourself more time, because time is gold right now, is to go back to your current investors and just ask them to do more money at the last round price. So we've seen that tactic a lot, just to extend timeframes and runways generally. But hopefully some of that data that I shared will help people understand that, yeah, it feels like things are happening at the same clip as before.
I mean, just for the entrepreneurs, assuming a lot of the entrepreneurs that are attending Startup Week Buffalo are at the early stage, I think it's a different story if you're at the early stage versus you're at the growth stage. At the growth stage, I think we're borderline bubble, if not in a pretty significant fintech bubble right now. But that doesn't matter to you. What matters to you is, okay, we're kicking something off. How do I scrap together my pre-seed round? And I think that is harder in a Zoom environment. It's harder than ever. I think that's one of the reasons why accelerators are more powerful than ever. That $100,000 to $150,000 in that time is really powerful for early stage founders. But outside of that, it's about forging relationships with potential angels and potential early stage investors, all of whom may not be quote unquote professional investors. And so they may not have a robust process, and they may be struggling to forge relationships. So when you are out there fundraising for your pre-seed or your angel rounds, you have to be very thoughtful and very particular about how you're going to attempt to forge a relationship with the folks on the other side of that Zoom call. Why do relationships matter? Because those investors are in it for the long haul. They're in it for 7 to 10 years. So, again, if you're listening, how I would challenge you is to think about how you're going to forge relationships with those prospective investors over Zoom.
Maybe something to add to what John is saying, at least what we're seeing is an acceleration of this notion of being able to be outside of the core centers of startup investing. I know we're in New York City, but companies that are outside of the Valley, outside of New York, outside of London or Berlin are starting to see a lot more interest, or at least openness, from those investors to at least have that first conversation and build that relationship. It seems like the center of investment is moving. So if you're a founder that's outside of one of those cities, outside one of those centers, you're no longer at as much of a disadvantage as you were maybe 6 months or a year ago. That trend seems to have been accelerated rapidly. And taking a Zoom call with a founder from South Africa or from Buffalo, this is kind of seen as, well, let's see what this company is doing and what this market's all about, and at least have that call and see from there.
That's an interesting point that you make, Yossi, about centers of investment and activity from that standpoint. I think, we're seeing more activity in the Buffalo area. And I think one of the questions that, at least I've come across with some startup founders is, how do I get access to some of the investors who are in the centers of influence, if you will? And, especially now that we're a little bit more remote, you're maybe 2 or 3 degrees separated from a good connection that way, where you can build that kind of rapport. Any thoughts or comments on how can founders look to try to bridge that gap now that they're a little bit more remote, can't meet them in person necessarily, but still want to try and break into places where investors, at least for now, still, coexist, right?
I mean, I would go back to Yossi's point, which is people are looking more broadly now and see that as an opportunity, right? So if this event was in person, David, Yossi, and John and myself actually probably would not be up in Buffalo, right? And so now that, we're all living in the virtual world, I think you actually have much more democratized access to people and capital. So an ability to shoot off a note to David and say, I saw you at Startup Week, you made a really interesting point. I wrote this article that has a similar point, and make a connection with David has now just opened up significantly. So, I see opportunity here. And I've encouraged founders who say oh, well, I can't go to a meetup or whatnot. There's a lot of opportunities online that you can unlock.
And it sounds like me that also goes the other direction too, right? From investors as well. You're seeing this as a way to connect and go beyond the walls of your cities, if you will, and be able to participate like we are right now. And so that also opens up. So it's just like the forum for these, acceleration and meetings have moved online, and that helps both the startups and the investors from that standpoint.
Yeah, Techstars New York has a company from Nigeria, from Lagos, going through it right now. That would have been a harder proposition for this individual to move with his family from Lagos, and now it's seamless. I talk to him every day. So
one of the insights that we've been talking about as investors is that industries in general that have traditionally been resistant to virtualization are now being virtualized or will be virtualized by entrepreneurs. So you can think of that very broadly, right? Education, traditionally been very resistant to virtualization. Healthcare, right? Raising capital from venture capitalists, another thing that's traditionally, it's had this you have to meet in person, and investors and entrepreneurs are figuring out now we're seeing full cycle deals happen, on video calls or phone calls. And my only tip for this would be sometimes just offer, right? Would you like to jump on a phone call or a Zoom call? And you'll find a lot of people say, phone call would be great. I can go for a walk. I can talk to you while I'm really tired of being on Zoom, and just give them something a little different. Now, don't use some obscure technology because then you're making them deal with that. But, I think venture capital is not any different than a lot of industries that are going to be transformed because they're no longer going to be fully resistant to virtualization.
Cool. I like your comment about jumping on a phone call. I try to shift to phone calls over Zoom quite a bit lately too. This is very helpful, and I think that it answers a couple of initial questions that I know I've heard around town as well. Just a quick reminder to the attendees, as you're listening and you have questions, do put them into the Q&A section so I can read them off as we go. I'd like to try to include those in there if we can. Obviously, as part of this now, that kind of also opens up the kinds of startups, and this probably also opens up the opportunity for founders and who are building teams to find team members. I work with a company that is remote first, right? And so they're able to recruit from all across the nation, and it doesn't have to stop there. It can be across the world. So that kind of brings in the diversity aspect of team building and founders and so on. I kind of want to talk to you, all of you, a little bit about that. What are you seeing in terms of, are you seeing a little bit more attention, probably just by news and so on, but more attention and more focus on growing a diverse team? Where are you seeing the trends there?
Sure, I can jump in on that. I think it's a moment of opportunity, right? I mean, there's several crazy things going on in the world, right? Some are new, some are not. Some maybe we're just recognizing and sort of focusing more on. In terms of inclusion, diversity, I think that everybody's sort of being introspective in this moment, and I think that's really healthy, right? Where people are saying, how have I been complicit in some of these problems, and those things that I say I don't want to exist persisting. And I think everybody's sort of thinking about that from their own frame of reference, which I think is really awesome. I think companies can, startups can do the same thing, right? And when, as an example, we started Techstars, it's for white males that founded the company, and if I could go back in time, I would change that. There's diversity in other dimensions, but not in all the ones that we'd like to pay attention to now. So it's hard to change that when you're 300 people, right? It takes time. When you're 3 people, it's much easier to be thoughtful about that. And so part of the coaching that we're providing is to really think about, your own team's makeup, and not because it's the right thing to do, which it is, but because it leads to better outcomes, right? I mean, there's plenty of data that shows that, when you have more diverse teams, you have better financial and economic outcomes. And as investors in these companies, that's also what we want. So I think we have a unique opportunity to really be introspective, regardless of what organizations or companies we're involved in.
I think from
go ahead, yes.
I think from our side and the fund that we're launching called Venture In, we run a coding school in South Africa, which I mentioned. But what we're seeing is a lot of companies starting to see that the thesis of kind of talent being equally distributed, but opportunity isn't, starting to come true. And that there are incredible individuals who live globally outside of these centers, which I mentioned, who are extremely talented, extremely capable, and given the right opportunity, will rise to that opportunity and beyond. And like David said, not only is it the right thing to do, but we're also seeing that there is a massive cost advantage in doing so. There are challenges in doing so, but there's huge cost advantages to hiring a developer from Lagos, as an example, as Jenny mentioned, versus San Francisco. And being able to look outside of the known network and talent pool can give your startup a tremendous advantage in terms of attracting people that ordinarily wouldn't be able to get access to a company that's building a tech startup in New York City. And that would be the dream of an individual living in Lagos to be able to be part of that story. So I would think along those lines of how can I use what I have around me as this opportunity to expand the kind of network and talent that ordinarily wouldn't be able to get attracted to these companies, and use that as my ultimate advantage in the ethos of what I build in the startup.
Yeah, I mean, it has been said point blank. So just to make sure it's clear, as investors, if everything else is equal, we are going to invest in the diverse team. And we're going to invest in the diverse team because we think the diverse team is going to outperform the homogenous team. And it's that simple. So if you're a founder, and it's not so easy, it's easy to say, okay, small team of 2, we add one more and all of a sudden we're 33% diverse. It's just one person. It is not easy, but just know and use this as a catalyst and a fire under your butt to build a diverse team from the beginning. There are ways to hack a diverse team from the beginning. It doesn't have to be co-founders. It could be mentors. It could be your advisors. It could be everyone you surround yourself with. And it starts with your social following. Are you following diverse viewpoints on Twitter and on social media? And as you build that diverse network, you'll be surprised at just how much easier it gets to build a diverse team. Kavi in the questions had asked a question on, do you think the Zoom culture is going to go away post-pandemic, post-COVID? My answer to that is similar to my answer on dealing with a diverse team, which is who cares what happens, because you're going to get really good at it and you can leverage being fully distributed as an advantage. If you use this opportunity to build a fully distributed team, that's going to be a unique advantage post-COVID for you moving forward, running at a significantly lower cost basis as you pay Kansas City, Missouri developers $90K instead of New York developers $190K. Soapbox.
So while I agree with all of that, and it's very aspirational, 90% of the people I talk to that don't have diverse anything say it's a pipeline problem. And so, you know, to John's point, like, you need to do the work to build your networks, because if you're just looking around at who you know, it will always be a pipeline problem. So, I mean, you know, we had that issue on this panel, right? It's like, we have to all just like make the extra effort and figure out, you know, who else do we know that can unlock new networks.
And Yossi, kind of going back to yours, and like, you have experience in launching this in South Africa, and I'm kind of curious if the concerns from founding teams are similar across in South Africa, or if you're dealing with the same issues here as well. Like, do you have South African teams who are able to tap into US or European developers or team members as easily as you feel like as US might be able to?
It's a good question. I think the question of diversity is different in different markets. So what does diversity mean in South Africa versus what does diversity mean in the US are potentially two very different answers to the same question. And in South Africa, what we're seeing, majority of startups are looking for primarily individuals who have scaled a company in a market that's outside of South Africa. It's a very small market. So when you're looking at diversity of team, there's the typical questions you would ask, but then you're also looking at, is there anyone who comes to this startup that isn't from South Africa, that has access to other markets, that has experience on scaling a startup outside of this market and being able to be successful in doing that. So the question from an investor's point of view is asking a slightly different question and a slightly more nuanced question than just maybe what is the gender or race of the individual. It's that plus what kind of diversity of experience do they have that they bring to this team. That's
interesting. That's very interesting. I think Jenny, you kind of hit the nail on the head in a lot of ways. As you know, there's if we don't put in the effort, and we last minute kind of thing for the panel too, is we're going to strike out, just because the network is effectively what we've made it over time. And I think that as we grow out of it, we have to step out of those bounds. So that's very apt. The couple of quick questions is that come out of this is, so in some ways what we're talking about is that both with this virtualization of post-pandemic world, if you will, as well as this diversity issue, they're kind of connected, and they're kind of, I feel like they might be able to help each other, right? And it's sort of like we're growing our community a little bit more. And in so doing, we're able to leverage a little bit more talent, leverage, as Yossi mentioned, right? It's not just talent and different perspectives, but also just different experiences that you've had that you bring onto your team. And kind of related to that, Jenny, I kind of wanted to ask you, so with specifically with the fund that you're part of, I was looking at your website a little bit, and it makes mention of it's like a community-oriented fund, if you will. And it's like, I think it's like startup founders for startup founders. Do you mind kind of digging into that a little bit? I think it's a very interesting type of fund. If you could expound on it, that'd be great.
Yeah, sure. So about 3 years ago, well, actually, more than that, but as I was running Techstars programs, companies were coming through my programs, like really great companies, and they were struggling. They were coming out at demo day, and they were really struggling to raise, smaller amounts of capital, what we'd call smaller amounts of capital, $750 to $1 million. And so they were going kind of door to door collecting checks from angels, 25K checks, and it was taking forever to get their rounds together. And so it was interesting because that was like in direct contrast to what everyone was saying about the New York tech ecosystem. There was so much money flooding in. It was the second biggest tech ecosystem. Well, why were my founders, brilliant founders that were coming through Techstars, kind of struggling to get rounds together? And as we kind of dug down and kind of uncovered what was really going on, was that so many of the small micro funds and seed funds that had started, 5-8 years ago, had raised massive amounts of capital, and they were no longer writing these small checks. So they were no longer writing 100, 200, 500K. They were now, really proper seed investors. And so they were writing 1.5 million into these larger rounds. And so we kind of scratched our head as a community of founders and said, what could we do to support the early stage investment community? And so we'd all been kind of doing a little angel investing on the side. And so kind of got together with some founder friends and said, what if we pulled our capital into a fund and we invested in like all the great companies in New York to start with. So we started with New York. All of our LPs are the people that give us money, or all other founders. And although we have this funny name, the fund, we're actually just really more of a community. So it's really just about kind of supporting the next generation of founders. Learned a lot about communities and networks from, the 3 people on this call over the years. And so, definitely taken a lot of inspiration from, the incredible network that Techstars has built. And now kind of, translating that into something different. So.
That's really neat. And I wonder if that's a model that could be replicated in other cities. I'd imagine that would work.
Coming to a city near you.
There you go. Very nice. So this is really interesting. Now, kind of shifting focus a little bit, are you at this time kind of seeing any particular types of startups, more of, especially since perhaps the pandemic started, or just in general? I know, like, for example, we know there's more noise and signal as well in the fintech world, increasingly more so in the blockchain world. What else are you seeing there from founders, and what kind of problems you're seeing that they're trying to solve? Is there any commonalities you're catching?
I mean, I'll let John and Yossi talk about fintech more specifically, but we've seen incredible inflow at Techstars. Our applications are actually open for Techstars New York again, and the inflow that we see around future of work and kind of distributed workforces, retraining. I mean, it's just amazing. That's an area that I'm pretty excited about. So fits well into one of our theses. And another one, as David mentioned, is health, right? As the regulatory environment is shifting quickly, as founders are trying to, address some of our, most critical issues, we're just seeing incredible inflow of talent and of creativity. So very excited about both those verticals, and also really excited about, fintech and the intersection of that. But I'll let those guys talk about that.
Yeah, I mean, I can geek out on fintech pretty much as you have an appetite for. I talk about fintech as a vertical, and then sectors. And I know I'm kind of I'm shoehorning the term sectors, but lending, wealth tech, asset management, cap markets, payments, and so on. And what we're seeing is a downtick in lending. We're in a zero interest rate environment, not terribly surprising. There's also, most investors have sort of realized that from an underwriting standpoint, alt data just hasn't proven out as an optimal way to reduce risk in lending, whether that be on the B2B or B2C side. BI technologies and digital banks also on a downturn in going the other direction. As you can imagine, low interest rate environment, prop tech has risen this year and is pretty exciting. I think within each of those, there are themes that we can talk about. I'd say the theme that the majority of the industry right now is talking about is banking as a service, and a correlated theme of embedded finance. At the highest level, banking as a service says, what if we could take one layer of the banking stack and outsource it? And what you used to think of the stack from a technology standpoint as the data layer, the network layer, the app layer. Now they're looking at it as different layers of functionality. And can we outsource, or can we consume as a service any of those pieces of software? Well, why are we chasing that? Because Marqeta, Robinhood on the payment side, on the B2B payment side, Stripe on the consumer payment side, Robinhood on the trading side, are all arguably banking as a service technologies that have created decacorn. So I joke that a banking as a service flavored Doritos bag could raise a seed round right now, and that's because it's sort of overhyped. And so you see a lot of rounds of companies that say, okay, we can create just this one layer, expose it via an SDK for consumers to leverage. And so that's a huge theme, and something that entrepreneurs should be thinking about. The reason that entrepreneurs should be thinking about it is because the potential TAM of a banking as a service company is significantly bigger than ever before. You could be a market leader, and even extend that market to other verticals like healthcare that had never consumed or never monetized via fintech. Now they can monetize via fintech. Now they can offer their consumers a better experience thanks to plugging in a banking as a service layer into their existing stack. So more on that. I probably geeked out too much for the two fintech fans on the line, but feel free to shoot me a chat and we can talk more about that.
I don't know if a Cool Ranch flavored Doritos bag could raise any money. It's so bad, but the rest are pretty good.
So what I'm hearing is that as long as it is Cool Ranch, now
not Cool Ranch. The only thing I'd add, and then I'll let you guys jump back into maybe some blockchain thoughts, Yossi. But I think we ran this little exercise internally. I don't remember when it was. I guess May. We called it May Madness, so it's probably in May, where we just tried to figure out what's going to change in the world, right? Sort of post pandemic specifically at that time. And one of the things that has popped out, I mean, a lot of the things here that are being talked about, you could sort of see coming. But one of the things that surprised us a little bit is how much flow we're seeing across the system around sustainability now. People have sort of gone back to like, hey, what's important, right? And, their health is important, right? And their kids' education is important. And, for many, right, it's sort of the answer as well, preserving the planet is important, right? And so we're seeing a lot more flow in that than maybe we had predicted, which is great. And, we have programs with the Nature Conservancy and others that are focused on this type of activity around sustainability. But in general, right, that was a really fun exercise to run because you just sort of thought about, well, how are behaviors going to change? And if those behaviors change, how will that cause new industries to emerge or industries to change? So again, most of it was predictable. I think the one ad would be sustainability.
That's really interesting. I think to kind of piggyback off of that, I've seen some new startups come through that are kind of combining the advent of the pandemic, as well as folks are spending more time at home, folks are spending more time with their kids, folks are spending more time with just their families, and they're like, wait a minute, there's quite a bit that we were starting to we were missing out on for a while here. This is kind of recentering a little bit on a personal level, and I think that there's some startups that are kind of taking note of that and finding ways to work around that. Really quickly, I do want to ask about, are you seeing, I mean, this is Techstars, but are you seeing more like, as opposed to just purely tech centric companies, you're working with companies that are more tech enabled, where they might be working within an industry that's typically not, tech savvy, if you will, and they're layering on technology to kind of either improve efficiencies, grow the market, whatever it might be. Is that a fair statement?
Yeah, for sure. I mean, I think that's just how we think about tech in general, right? There's plenty of industries that are not tech enabled. I mean, easy example, one of our very early funds, 2009, right, was involved in Uber, right? It was very little technology there. It's really a platform and a service. The technology's obviously grown over time, but in the moment, it was simply adding technology into an area that had very little. An industry that had very little. And I think, those opportunities are still out there. By the way, I mentioned that was 2009. I think that was one of 3 unicorns that we funded in 2009 in 1 year, which was, by the way, the tail end of the last recession. And so, amazing time to be an entrepreneur, right? You've all heard the cliche that great companies are started in these moments. That will certainly be true with vintage companies, 2020, 2021. I think you'll see, a higher number than usual of great, successes because of the opportunities in the market. But yeah, we definitely think of technology as enabling something that maybe today isn't already enabled through technology.
And one more question, and then Yossi, I do want to talk a little bit about blockchain, especially how it relates to fintech. But John, what you mentioned, there's a lot of activity in the fintech space, and the question I have from your perspective a little bit is, so what are you looking at, right? When startups come to you and they're like, hey, I have a Dorito bag, and you're like, wait a minute, that's not the Dorito bag I want. So how do you, what are you looking at in terms of signals and clues as to, yeah, this is something that really kind of makes sense versus something that says, yeah, this is not going to see the light of day very well?
I mean, there could go a lot of places with the answer, but I'll try to ring fence around what I think would probably be supportive for the entrepreneurs that are listening in, and I think that is the potentially conflicting feedback between being completely disruptive or going 0 to 1, inventing something entirely new, and what are you building now, and what have you built now? And I say potentially because founders really need both. If you talk to a lot of fintech investors, they see or they report that they're seeing a lot of things that just feel like Me Too, another challenger bank, another data API, and is this really a step function? Is this really transformational? And one of the things that's difficult for founders is to balance and to actually hold both this long-term, completely transformational vision of what if financial services as we know it is completely different in a decade, but also have an idea of how your product can de-risk that plan along the way and what you're doing to acquire customers today. So again, a lot of entrepreneurs that I speak to feel like they're getting conflicting opinions because somebody tells them, okay, but your product sucks, and somebody else is beating them up that this feels like something small, and the best entrepreneurs really balance the two together.
That's helpful. And you made mention about, kind of looking down the road and seeing if finance and how we do finance changes down the road. That dovetails right into Yossi here, because with everything blockchain, just both from, I had to do a little bit of educating myself, because there's cryptocurrency and blockchain as the technology itself, but then there's this entire world of investment within blockchain as well. And I think that there's a lot of interplay, and I'll be honest, I don't know all the details. But Yossi, I think I'm going to turn it over to you and kind of tell us what you're seeing from that standpoint here.
Well, I think you don't know what's at play, and many people don't know what's at play because it's kind of unfolding as it goes. And what we thought maybe a year ago or 2 years ago is showing to be different this year, and every year there's a new technology stack that's being built that has the potential to disrupt the bank of the future, as John said. But I think if you just go back to the core principle of what makes blockchain interesting, or at least the promise of what makes blockchain interesting, is the promise that it was going to increase or open up access to the financial world and increase individuals' personal sovereignty. And what we mean by sovereignty, we mean the ability to own and control their assets. And whether that asset be financial assets, or whether it be their data, as we're seeing in the world of privacy becoming more and more important, it's the ability for technology to now be able to do that on a global macro scale without any intermediaries. And what we're seeing is that technology is very difficult to build and is still being built. And the primary use cases that exist today is still in the kind of domain of trade and payments. Those are the two use cases that have shown success within the blockchain domain. There's promise in a lot of other areas. We're seeing emergence of DeFi, or decentralized finance now, with new ways of lending being built, and a lot of hype and excitement in that space. There's a new space now of non-fungible tokens, which basically means that you can create a digital asset that is permanent, that can't be taken away. So if you think of a ticket as an example, a ticket to a show, you can now prove that this is the original ticket, and you can now start doing a whole bunch of things with that, like allowing people to resell it, or being able to earn royalties on future access through that ticket. So there's new technologies that are emerging, but what we've seen as the primary use case that still exists today is payments and trading. and a lot of technology happening there. And a lot of those assets which you're looking at, which people are investing in, is around solving that at scale. And that may not sound that exciting, but those are multi-trillion-dollar markets. So if they do get right and they are solved, you're looking about a massive prize in terms of networks that are being built that are dislodging trillions of dollars of flow that happens in those networks today. So it's important that it gets done properly. It's important that these conversations about kind of how to go about doing it, whether it be a Bitcoin maximalist or an Ethereum maximalist, or now emerging Aave maximalists, and the kind of religions around these technologies, because what's at stake is producing a new way that the world can transact, giving that access and that personal sovereignty that doesn't exist today, as we've seen in many countries, and potentially down the line in the US.
Fascinating. And kind of, I'm going to jump in here with a question from the audience here. So Kakavi is asking, open banking APIs have been fairly popular in Europe, but haven't seen ground in the US. What are your thoughts on the future of open banking in the US and how it would affect, current fintech startups? Or is there maybe opportunity there too?
Yeah, well, listen, I mean, Europe has spent billions of dollars on PSD2, and I like to say they've lit taxpayer dollars on fire with regulation, trying to spur innovation, and that innovation has never come. Sort of, if you regulate it, they will come. Has just never come true. And there are hundreds of consultants and the best out there that hate me for saying it, because they're making a living peddling open banking. But my opinion is that it's an efficient market, and you have startups driving towards open banking in the US. You have whether it be, and I'm talking about any layer of the stack. Traditional open banking would be, can I consume my data, my transaction, my performance data, and can I put that into another application? A derivative of that becomes, can I own the account? Can the account be domiciled with me, and then I have zero friction when moving it around? And then the latest generation driving embedded finance is, forget just transactional data. What about fraud data? What about payroll data, lending data, all of this? And can I move that around so that anyone can consume data from different financial institutions and build sort of a mega app? The quick is that startups are driving it. If you are consuming an app that leverages Plaid data, a fintech app that leverages Plaid data so that you can see all of your transactions in a third-party app, if your bank isn't playing ball, then that bank is going to lose their customer to a bank that will play ball. And so there's some areas where I believe regulation is necessary specific to open banking. I think we'll actually leapfrog Europe with open banking technologies, but it won't be by regulation.
I just want to add to what John said. I think if we look back to the movement of technology to the cloud, there was a phase where we had these hybrid technologies where people went from on-premise to cloud, but they had this kind of layer in between that was sitting in the hybrid side, where there was a little bit of confusion or concern around regulations on moving your data into this kind of trusted party that is governed by some country that may be outside of the country you live in. And a lot of those questions have been removed, and those hybrid providers have disappeared, and now there's just straight gateways to the cloud. And I think PSD2 is almost like that hybrid step. I, as being a kind of blockchain believer, think that even in the world of open banking, that's the hybrid world of the comparison of cloud, where what we're actually going to see is open networks, and open networks are completely open. And on top of those open networks, you're going to build financial services that will sit on top of them. And the idea of owning your assets and taking it with you as a novel idea today already exists in something like Bitcoin, where if I have my Bitcoin wallet and seed phrase, I can access that currency no matter where I am in the world using a piece of software. So the rails of an open banking network are being built, and they're not going to be built, I believe, the winners are not going to be built in the traditional startup sense that we're seeing today. So most of those companies building open banking solutions, I think, are going to be leapfrogged by these open networks in the world of crypto.
Fascinating.
Also, I check out Unit and I check out Bond as two exciting Series A, Series B fintech startups that are democratizing access to data. In 10 years, Yossi and the blockchain will have all of your consumer data on it available, as long as you've got your key. But in the meantime, two exciting startups to follow.
And so one of the follow-ups I have on this particular piece is also, so this is not just, obviously finance and currency is a big piece of it, but I think there's, we're talking about the ability for people to maintain their own data and securely. So we're going into security to some degree as well. I know the reason why I bring this up is I know of a startup here in Rochester called Token, and they have like this identity ring piece. And the question, what sparks this is, there's a lot of security concepts around blockchain and applications. And Yossi, are you seeing startups that affect that as well, where folks are not necessarily going the currency route, but they're using this for security industry and so on? And how do you see, are you seeing play there?
Yeah, certainly we're seeing a lot of companies working on the identity layer and using blockchain for that, either in terms of owning your identity on the internet. Most people use kind of Google or some kind of OAuth application to be able to log into all third parties. And you've got someone like Google or a Facebook owning your identity. And we've seen why that's a bad idea more recently. And there's a lot of technologies trying to solve that in a distributed way. And then a number of companies trying to do that in terms of the actual ownership of your data and the data that you're storing. The textiles company that went through Berlin, the Textiles Berlin program, a company called Arweave, is doing some extremely interesting things in that space, in building a permanent, secure, cryptographically secure data archive. So that's a company you may want to look at in that space.
Great. And John and Yossi, if you don't mind putting those into the Slack, into the chat, that would be super helpful for the team here. And then lastly, I kind of want to round this out for startups who are not necessarily directly involved with fintech or with blockchain and fintech, but are kind of they're obviously leveraging this. And I'm thinking of an example here, Jenny. I think you had a video call conference with is it Christy of Wagmo, and she's in the insurtech space for pets, I believe it is. And so you're seeing fintech kind of come through in all sorts of different flavors and in places where you wouldn't necessarily think of it. How do you guide startups who are toying with the fintech space but don't know how to maybe approach it? Should they be embracing fintech a little bit more and trying to get a better understanding of it? What are your some thoughts there?
Yeah, I mean, in 2006, I started a mobile company, and mobile was like a vertical, right? And so, as we're seeing now, financial services, fintech applications are being integrated into, all types of use cases. And I think, that kind of fourth platform that Matt Harris talks about is a really exciting opportunity, right? And we are investing heavily in companies that are embedding it or having kind of native applications for some of these fintech services. So yeah, I think it's where the world is going, and we're excited, especially at Techstars to New York, to be looking at those areas.
Fantastic. And then finally, we have just a few minutes left. I have one last question for both Yossi and John, more Yossi in this case. As founders are looking to attack the blockchain crypto space, how would they get started? What are some thoughts that you would recommend that they look at in terms of how to validate their own ideas that they might have and so on? Like where to go, right? It's a pretty broad and open field, it feels like.
Yeah, it is a pretty broad and open field, but what's great about the space is that there are vibrant and active communities all down the proverbial blockchain rabbit hole. So whether you're looking at the Bitcoin community and you want to start there are podcasts, blog posts, people on Twitter. There's a whole sub Twitter called Crypto Twitter that you can join to really start to get of what is being built, what are the technologies in the space, and where are the gaps and the challenges that need to be solved. It's very transparent, it's very open. So you can very quickly start to learn where there's opportunity in the existing technology stack that exists and be a contributor towards that, or build additional applications that sit on top of one of those networks, or where is a network that's being built not solve the problem correctly, and you can bring your expertise and your capabilities to that space. So it's a very open community. So I would encourage you to get involved with it, contribute to it, and from there, what you can build will emerge.
Thank you for that. And a little tongue in cheek, but when do you imagine the investment community starting to use this to fund startups?
Well, we saw in 2017 and the beginning of 2018, the investment community using it in a large way with ICOs. Billions of dollars went into different protocols and different networks globally. And I think what's been discounted, because that's kind of fallen away because of a number of challenges from a regulatory point of view, is that technology has disappeared for now, but I think it will emerge as the way that startups will be funded in the future. So I wouldn't write it off yet, and I think you're going to start seeing ICOs coming back as a theme in a year or two as a way to seed and fund these networks.
Interesting, very interesting. Well, we have just 3 minutes left. I want to take a quick, a little bit of time just to go around the table here as final, parting thoughts from each of you for the Buffalo community. What would you recommend or suggest that they focus on, particularly during this time? Any kinds of tips in terms of reaching out to investors outside of the centers of influence and so on? Anything that comes to mind as you're working with startups?
I shared earlier in the chat, this open letter that I wrote, and I just reinforce that again. I mean, it's an amazing time to be an entrepreneur. I know it feels hard. I know it feels uncomfortable, but that's what makes it amazing. And that's what creates the opportunities. So, stick with it, focus on the future state of the world that you believe in and want to make happen, and recognize that talent's going to flow to you if you stick with it, and capital's going to flow to you if you stick with it, because there are a lot of people who won't jump in right now, and you can have a big head start in a few years. So it's just awesome to watch people continuing to innovate in this moment.
Yeah, I would agree. Incredible time to be an entrepreneur. Just, lean in, build your network. Don't be shy about reaching out. If you can connect with an investor or whoever you're trying to reach at kind of a deeper level, as opposed to, hey, can I just pick your brain for 15 minutes, which is usually not super effective, but, really kind of, as David said before, figure out like what's the two-way street. And how can you kind of get that person excited? People have more time, they're home, they're on their Zooms, and, they're willing to roll up their sleeves and help. You just need to lean in.
Great growth hack. Not a lot of people talk about. If you want feedback, apply for an accelerator or a bunch of accelerators, not to be too much of a Techstars plug. But you can always hit me up at John Zanoff if you're working on something cool in fintech and want some feedback on it. Hit me up on Twitter.
Yeah, I think from my side, if this pandemic has shown anything, is that there are many problems that the world needs solved, and there's many opportunities to make the world happier. And we have technology that is accessible at a scale that never was before, and a market globally that wants to consume it at a rate that never was there before, and capital that wants to fund it at a rate that never existed before. So you've got all the ingredients to build greatness around something that you're passionate about. So go forth and conquer. And if you need any help, you can email me at yossi@hey.com.
That's fascinating. And also, I think, Yossi, you started a podcast on Venture In for anyone who's, I think, interested in following your journey. Is that right?
That's correct. We're about to release soon, and David was my first guest. So lots of interesting things to learn on the world of venture investing for anyone who's interested in that path as well.
Fantastic. Well, you know, I have to say on behalf of the Buffalo community, thank you so much, all of you, for joining. And Jenny, thank you for taking the time last night, reading my emails and hopping on. This was very, very.
Thank you.
Thank you for everyone for your generosity. All right. Enjoy the rest of your day, everyone.